Guys, what's going on? My name is Ryan. I trade ETFs, and I like to make videos on the technical analysis that I'm seeing in the charts each week. So today we're going to be looking at SOXL, which is the Direxion Daily Semiconductor Bull 3 times ETF. Since it is a 3 times, it is a little bit distorted. However, I find that it tracks the 1 times ETF very well, and we see the exact same pattern. And therefore, since I have the majority of my technicals on SOXL and I trade SOXL, I'm just going to do my video on SOXL. So let's go back to SOXL, and I've got this big blue box here, and the reason for it quickly is I got a comment from somebody, and I got a message. They said, shouldn't mean reversion be kicking in here soon? And I replied back with, mean reversion did not kick in over the course of the last 16 months and the 706% bull run that we saw. So I think that mean reversion in that argument is a fairly weak argument to make in regards to, some price action that the majority or the herd is expecting. I've been saying it for about 3 weeks now. I have a bearish sentiment towards it. I had a bearish case here for the longest time. It said long-term end of the 5th Elliott wave, medium-term end of the 5th Elliott wave, and short-term end of the 5th Elliott wave. We far surpassed my 227.2 fib resistance, which is where I sold out of, and there's a new unsustainable uptrend. There's an Rsi Divergence. We were at the top of our channel here, and there was a head and shoulders. So we're going to get into all of that. I just wanted to dismiss kind of the mean reversion argument. I can very easily. I don't want to say that I would necessarily trade against semiconductors. I'm just saying that overall it's fairly weak right now, and I would not be overly bullish necessarily as far as a medium-term to long-term prediction goes. Short-term, yes, I can definitely see it bouncing up, but I just don't like the mean reversion argument. Anyways, let's dismiss that and get into the trading. So right here, we have our breakout into this beautiful long-term up channel. And as far as Elliott wave goes, we have a 1, 2, 3, 4, and 5th wave right here. When we came into the 5th wave, I saw a upwards channel breakout. And this represented to me an unsustainable uptrend because for the longest time, we had this really nice, strong, bullish run upwards in this channel. And since it was wave 5, I was kind of expecting some type of topping pattern, and we definitely got that. A lot of strong uptrends are marked by some irrational exuberance, and we broke out above this already very strong uptrend here, and we went even more parabolic at one point, getting to 113, I believe. We were sitting down here at about $81.5 for SOXL, so that represents a drop of about $33, $35, which is very significant. Had a huge pullback in the last 2 weeks. And I'm very happy with my trades on SOXL thus far. So moving from the daily to the 2-hour chart, first thing I wanted to establish was that we have these time clones. These indicate points in time, and I draw this low here to the next low, and it comes back and spits out basically where the next low is. We have an intermediate move. We have a right before the breakout, and our next one falls right around here. So we're kind of in the middle of this channel right here in between these two time signatures. However, I do like to use these just kind of as a guide as to kind of expect some interesting moves to occur. Sometimes, like right here, nothing occurs, but other times, this time signature right here, if you were to, get wary of this right here, you might have considered selling out or paying more close attention, setting a stop loss, and you would have saved yourself from this big downtrend here. So I do still see them as being relatively significant. This one marked a breakout before we had, a $35 move upwards. And so sometimes it's hit or miss, but I just like to point out what it is in the chart. So to zoom in a little bit, this was our new unsustainable uptrend. I saw a wedge pattern going on here, a divergence, and an overthrow pattern, which was very nice. So what's an overthrow pattern? Well, an overthrow pattern in a wedge is where it breaks out of these trend lines. And so we come up, we have our 1, 2, 3, 4, and then this would break out of this range before going back into it and falling all the way to the other side. And I saw that definitely here in our chart. We have our 1, 2, 3, 4, and 5 overthrow, and then we break down below it. As far as our divergence went, I saw 2 of them. Our RSI right here was about 82, 83, 84, and this one over here was slightly lower, but lower nonetheless at 80, and therefore I was looking for other divergences, and I saw it right here. As far as the volume, the bullish sentiment going into it, it was in a downtrend, and it never came back up to test these high levels up here, while price continued to set higher highs here. This is a regular divergence here in the price action. Divergences can take place over, a month, a week, a day, but I do find them significant, and ultimately they come into play. So that was the rationale behind my bearish sentiment. I was definitely losing a lot. Well, I wasn't losing a lot. I wasn't in a position, but I was bearish and wrong for a long time. And I like to admit when I'm wrong because I do provide predictions as to where price goes, and if I only show the predictions that are correct, then how legitimate am I? I like to show predictions where I'm wrong as well. And so right here, I sold out of my shares. We were at the 227 fib line, and I was holding SOXL for a very long time, and I ended up to take a nice profit here at this levels. However, I should have recognized that this was kind of a flag pattern, and we ended up doubling that move and running up about $16 higher than where I sold out of. So I was kind of salty about that, and for about a week and a half, I had to admit that I was wrong. However, it did come to play out fairly nicely as to what our predictions was. Now, I haven't changed up this ABC or these lines. You can go back to my other videos and take a look at that. But this downwards prediction was fairly nice for me, and just to prove that, here is on June 5th my record for SOXL. This is just what I was seeing as far as Elliott waves and a little bit of description as to why I thought that, and we ended up breaking down. So that's my June 5th one. I have an even nicer one for the record, which is here. So this was June 11th. I said that we were going to come down to A. We'd probably bounce back up to this previous area of consolidation right here. The 61.8 will act as resistance, and we'll come back down here to C, which is the original beginning of the wedge down here. Let's see how I did. So, I did pretty well. The next day we came down and basically touched this 38.2 range, which is where my arrow was pointing. I don't know if you can see this wick right here. We bounced up, we hung around this B, the 61.8, and then we finally we're coming down to C right now. So I'm pretty happy with my analysis of SOXL so far. But what's going to happen in the future? We're going to discuss that very shortly. So in the beginning, I said I had a medium-term end of Elliott wave. So I had a 1, 2, 3, 4, 5. Sold out when we started to make this 5 wave, I guess. And let's go to the short-term Elliott wave that I saw on the 30-minute. On the 30-minute, I had a hunch that this was a 9-wave pattern, which is the topping pattern after a long bullish run. We certainly had that. It's actually a 9-wave Elliott wave pattern. It's kind of complicated, and but I had a hunch here. But I sold at the short-term end of the 5th Elliott wave here at about 5. However, it was actually a 9-wave pattern, so we had a 1, 2, 3, 4, 5, 6, 7, 8, and 9. 9 marks the end of the Elliott wave, and it's kind of rare to see these, and so it was interesting to see it play out. Anyways, we came back down. We set in what I thought was this pennant formation, and we came down, set our first area of support, came up, set our first area of resistance. This is A, B, C, D, and E. And after E played out, we can see that we broke down all the way. And technically speaking, I had a measured move for the pennant, which is from the low all the way up to the high. First resistance and the first support zones, and you take that and you drag it down to the point of breakdown, which would be right here in this case, and technically speaking, this would be the point, which would be my target 2. My first target was over here in this range, and my second target was down here at the 23.6, beginning of the consolidation and the wedge, and the measured move from the pennant. I am seeing some interesting patterns, maybe something to watch out for in the coming days and weeks, and we'll get to that here on the 15-minute chart. So there's a couple price predictions that I have here. I guess you can see my target 1 right here was at the 38.2 Fibonacci support. But if you were to ignore all of these patterns right here, in fact, let's go ahead and do that. So I went ahead and deleted all of those, and I think it makes the picture a little bit clearer here. But I see a bit of a head and shoulders going on here, and that is quite a scary picture to be seeing here on one of the strongest sectors in the market. So what I see here is we come up, we set our left shoulder, come down, get supported, we come up, set our head, we come down, and then we set our right shoulder right here, and then we break down from this neckline, which you take from the bottom support of the left shoulder and the next support level of the right shoulder, and you continue to drag it off. We broke our neckline right here, we came back up to retest it, and then we broke down lower. Now, to me, it looks like we were being supported by the 23.6, as well as my original theory that this wedge will hold up. The theory behind a wedge is that you typically go and reverse all the way back down to the beginning of it. But if this is a true head and shoulders, which it is giving some indications of, it says that volume on the right side should be significantly higher than volume on the left side. And we see that in the volume as well as the price action. So the measured move for a head and shoulders, you take it from the head all the way down to the neckline, and then you take that neckline, or you take this, I have it in this orange dotted line going down here, you take this and you bring it to the point of breakdown. So in my opinion, the point of breakdown would be right here, would be at this point right here where we lost the neckline. So cloned this, dragged it over here, and this would be our measured move, which actually has us coming down all the way to this prior support zone right here. And I think that this would be a hard support zone because we have a lot of sideways movement consolidations right here. But I do want to note everything that I see on the chart. My first target was this range right here, and therefore I provided 2 price predictions here. My goal is not to be correct all the time, it's to be prepared. I can easily see either of these cases happening. So as far as this goes, I do think we have further to fall. We haven't touched the support yet, but we were very close to it. We broke down below this 38.2, which was our previous support zone for these 2, these 3, these 4. And so our next support zone is going to be down here at 23. This kind of looks like a bear flag to me here on the 15-minute chart. I can see us coming down here, touching this 23.6, hitting our actual bottom, running up to our previous support zone. Support becomes resistance, and then falling back down, making a slightly higher low. And then after this, we'll have gained enough bullish momentum to come back, test this neckline right here. We'll flag out sideways and then move higher, which will coincide with this time Fibonacci level. As for the bearish case, our technical target for the head and shoulders will be right down here at the $66, $67 line. So it will be very interesting to see what semiconductors do next week. If we go to SMH, you kind of see that same pattern here. If we go to SOXX, let me delete this, you see that same pattern playing out here. So yeah, I'd be skeptical, maybe not bearish on semiconductors, simply because it's been such a strong sector so far in the year. I wouldn't be necessarily bearish on it. However, price for the very short term is pointing lower. But as far as the medium term goes, I think that we'll catch a pretty good bottom right here. And let's go ahead and label that like I try and do each week. We'll call this target 3. And as for the long term, I do think that semiconductors will continue to play a major part in the technology revolution that the world is experiencing, and I'm bullish on semiconductors in the long term. We might look back at this in 3, 4, 5 months and say that this would have been a great buying opportunity, and I think that that will be the case, and that's why I added plenty of SOXL when we dipped down here to about the $80 range. So with this in mind, hopefully that gives you something to expect for next week, and I wish you the best of luck in your trading. Please, if you got anything out of this video, like and subscribe. It helps me out a ton. I appreciate you guys for watching me and taking time out of your day, and enjoy the long weekend. Happy 4th of July.